Welcome to everyone that's joining me, either in the Zoom room or on YouTube. So, usual routine, I'm just going to go through what I'm seeing in these markets, and then I will open up to any questions, take a look at my premium stock I'm looking at this week, and then leave it there. I'm going to keep this nice and short. I'm not going to go over 15-20 minutes. So let's start off. Why am I still calling a short on the FTSE? Well, I'm certainly not shorting the FTSE right now, but I'm definitely looking for shorts in the FTSE. And the reason, one of the reasons is, if you look at the growth rates here, you will see that we have, ever since the recovery in the post-lockdown, you can see this growth is just falling away, absolutely falling away. We've just escaped a recessionary level. We've got US GDP this week and Fed minutes, but we'll talk about that. But so if you look at that fall off in the GDP and then go and look at the actual FTSE, so the FTSE is coming up on the back of that really weak GDP. This is a weekly chart on the FTSE. So what I'm seeing here is this, I'm seeing this push up here as 1, 2, 3, 4, 5. We've done 5 little waves up there. So if we get a corrective wave, a 1, 2, 3, that ideally, well, as far as short bears are concerned, closes underneath this most recent all-time high, 79.05. If we close under there from that weekly, then obviously I'm going to short. I'm still looking for shorts at these highs. That short up there is that high up there is May 18. But that's where early 18s, where the rate cycle should have started for my money. Anyway, that's history. So here we are, 10 pips above the 8,000 mark. We made a new all-time high last week on the back of that decline in growth, continued decline in growth and continual poor levels of growth level. And what's holding it up is the banks and the big oil companies that are part of the FTSE are propping this up. Banks perform well in a rate cycle, and oil companies, well, we all know why oil companies are that high. So as the oil companies admit themselves, this is potentially a one-off. Because if you look at gas now, last time I looked at gas, it was very weak. Let's have a look. Yeah, so we're right back down to December 2020 lows. We're not divergent. We've come down on volume. I tell you what, if we start to pick up here, then I will be a buyer. But in the meantime, I'm not going to catch a falling knife for sure. All right, now if you look at oil is sitting up in a much more positive territory than gas, but nonetheless, at the very least, we are sideways. So for this, if this oil is a bullish consolidation, then I suggest we might drop a little bit further into this trendline support. And then if the bulls pick that up, then we could come up to 85.90. However, if this is a bearish consolidation, then we're going to trip up to this resistance, close lower in this weekly chart, and then start to break this support and then come at least retest that 67-65 level. What do I think is going to happen? I think we have, given the normal cycle in oil, I think this will tip higher. I think this is a potential head and shoulders here. So if we break this neckline and can close above 80 and hold 80, I think we're going to sit on that 83 and then go and find 85.90. At which point if we get back to the top of this part of the channel, then I think that will, I don't think that will hold. I think that will be the point in which we could see this start to decline. All right, oil's been coming up on, it's a strange market. Oil's coming up on weak inventories, build up in inventories being equating to weak inventories. And the FTSE is coming up on a decline in GDP. So, you know, these markets can stay crazy for all the time that you can stay solvent. So I was trying to lost the word I was looking for then. So at the moment, so there we are. The indices are holding up. So let's just have a look at the US indices. So we've looked at the FTSE sitting close to the all-time highs. We look at the Dow. You see the Dow is really stuck. We are in a tighter and tighter range on this. Can Fed minutes loosen this up? Possibly. If the market thinks the Fed minutes are more dovish and the rate cycle is going to calm right down, and potentially even see some rate drops. I mean, if that is the case, that could put a match under this market and see this go back up to the highs. So until we we're just shuffling in this range at the moment, until we get a decision outside of this range. Yeah, we could go up, break up, come back and test the trend line and push higher, or we could break down and then come back and find these lows. What do I think is going to happen? Well, the growth rates and the data that's coming through the US is like for like way better than you're seeing in Europe right now. So I think these dips are still viable. And look at the moving averages. If you're a fan of moving averages, and there's certainly a good guide, if you're a fan of moving averages, if we come down and find this 20, around about 3,300, 200, 300, and hold, then I think that could take us at least up into the underside of that trend line. Look at the MACD though. The MACD is potentially crossing. So if those averages cross and we start to close underneath this support, underneath that 20-day average, then this could roll over and these could all cross to the downside. At the moment, they are crossed to the upside. So that's any market that is sitting above at least the 50-day average, but here we're above the 20 on this weekly chart. That is not shortable unless you get a sell signal, a complete rejection of resistance. At the moment, we're getting nothing. All these weekly bars are very static at the moment. So at the very least, we need a dip. Even in a bullish consolidation, we still need a dip. That's how you can tell bullish consolidations are over. If they drag it down and the bulls step in, the volume picks up, then you know that the big money is supporting that price, and that price is going to go higher. And so let's have a quick look at the DAX, then we'll move on because I've already consumed. So look at the DAX sitting up there. Very vulnerable though, very, very vulnerable. Now the DAX is divergent. There's your divergence in the histogram. Averages are stuck up high. Volumes are all right. But we're not, 16,300 is the all-time high, and we are 15.5 thereabouts. So again, this needs a drop. That needs to come into 15K at least. So if that average comes up and meets the price, and we stay up there, then we can go back and potentially make new highs. Go back up to 16.3 and make new highs. 18.5 would be the target if this price is sustained. So these markets have become a little bit harder to predict, because particularly the US indices, because they have been so range bound. But don't get distracted by those ranges. If it's as I keep saying 2-3 times, if it's a bullish consolidation, then then buy the dips until it stops working. That's what I've been doing. I've stopped shorting the FTSE until we get a signal now. I was shorting the FTSE because we were staying under 7,900. Once we broke up and we sustained this 8,000, then I've left it, stopped. Okay, so I made profits here, small profits, and gave some of those profits back whilst I was still short as it broke up, but then just stopped shorting and then made money on the upside of the US indices. So, I mean, for the Dow and the spiders, S&Ps, I would look to buy. I would expect to see a low. Come on, it's not changing charts. I'm trying to look at the Dow. Yeah, I would expect to see about 33,300, 33,200 at some stage this week. Obviously, the US is off this week because it's President's Day. So I want to see a dip. I'll buy that and then see if we can get up to 35.5, maybe 36. And on the S&Ps, I would look for that 50-day average at just under the 4,000 mark. 39.50 will be a good place to buy the S&Ps, I think. Gold, look, we're above all the averages on this. I would look for 1,800, 1,810. Still looks a little bit too high, still sitting a bit too high there. I think that can do a deeper pullback on a three-wave correction. Three-wave correction being a 1, 2, 3. So we do a full move back into that, even 1788, 89 would be great. Maybe the Wednesday Fed minutes can do that. Maybe. And so if we look at the volatility index, that's come up, rose into late September, early October, and the markets it topped. We've seen a three-way corrective wave in this VIX, the volatility index, and the markets have responded correspondingly to that drop off in the volatility index. If this starts to really pick up and gather momentum, then hold on to your hats. We start to close above here. You don't need to know this. All you need to do is stay focused on the indices. Right, let's have a quick look at, you don't often look at currencies. Let's have a look at the euro. So Fed minutes this week. We've got New Zealand rates, no other rate decision this week. It's not that busy a week. Once we get the Fed minutes out of the way, we've got US GDP on Thursday, looking for 2.9%. Services data this week. There's a fairly quiet week with the G20 meeting as well. This euro is divergent. No, it's not. No, it's not. I'll take that back. We are convergent still, so a dip into that 20-day average could see that bought. The Europeans, ECB, are behind the curve really, so they've got some catching up to do. I think there's way too much money sloshing around Europe, has been for a number of years. In my book, these central banks have cocked up. Should not have kept rates that low that long. But let's keep politics out of it for now. Right, and pound. Pound's right on the line. This 12 is a game changer. So we come right into this trend line support. Oops. So if we hold this 120 and these averages cross, then we could potentially go up to 113 up there. Sorry, 130. But if we close under this 120, yeah, sorry, got my numbers wrong. If we close under 120, then I think this is going to start to crawl back to these lows again. And given that our economy is much weaker than the US, logically this would suggest that we could break this support and drop back into this lower level here. But let's see. All right, so let's look at a couple of my favorite markets at the moment. I haven't even looked at wheat today. Let's have a look. So wheat's touched $8 and dropped off. That's fine by me. Look at this divergence down here. This is as good as it gets. This is why the MACD is so great. Look at this new low down here and this higher low on the histograms and the averages. That is a huge buy signal to me on this wheat. So we've got these support levels on the wheat holding head and shoulders. So if we can close back above $8, as you've heard me say before, I think we're going to go back to 10. And ultimately, if we could even run to $15. So we've got a 1, 2, 3 wave correction, head shoulders pattern. We've got to close above $8 and hold $8 for that to push up. But I think that's perfectly feasible. But if I'm wrong, then we're going to close. We're going to break that low. And I'm going to close under there, and we're going to come back and find $6 if I'm wrong. In the meantime, I'm still buying pullbacks. Wisdom Tree ETF is a good one. You don't have to use leverage. But this is a buy and hold for me at the moment. I would $9 makes sense for a profit level. $10 makes even much more sense. So if you wanted to swing trade it, I would look for $10. If you want to buy and hold, I would just sit tight. I mean, even come up to $10, then back to 9. You could come out at 10 and buy back at 9. You don't know. I don't know it's going to hold. I don't know it's even going to do that. I don't know what it's going to be tomorrow, let alone next week. I'm not going to sit here and pretend that that's not a sure thing. That is my personal prediction. That's all it is. Right. Let's have a look. Let's look at things like orange juice. Okay, it's gone ballistic. This is what, we're in a commodity super cycle. So it looked really bit down and out there in July last year, and all the pullbacks have been bought ever since. Let's look at coffee. Coffee had a great run into 26. We pulled right the way back to 14. And we're currently climbing back. I think we might see 15, 16 again. Ultimately, I would expect that to go back to 26. So I think you might even see 30 on that. I think the target will be 30 on coffee. Commodity super cycle. All right, we talked about natural gas 2 years ago. Was it 2 years ago? Marked up this gas down here in, well, I started looking at it 16 and so on. But we saw this pattern on the gas here. We broke up here in August 2020. We did a couple of pullbacks here in January 21 and April 21, and then we just powered up. One, 2, 3, 4, 5. Corrective wave, 1, 2, 3. Why would you not believe in Elliott wave? That's classic Elliott wave. Okay, so like I said, if this gas starts to pick up here, I will start buying here. Otherwise, I would just let it drift, just keep an eye on it. Well, that's what I'm doing anyway. I'd love to see it down there at 15. At the moment, 15 looks likely. I have to be honest. That looks as if that can do a complete retrace to June 2020 levels. That would be great. That would suit me down to the ground if that did that. Right, let's have a look at a couple of stocks. Let's look at, wow, this, you see, this is, yeah, I get it wrong. Yeah, I thought Shoe Zone was dead in the water. I have completely got Shoe Zone wrong. It happens, but through risk management, you just get out and stay out. This thing is it's shot up to 270. I don't know what's behind this. I think it's a completely naff stock to me, but anyway, that's doing well. EasyJet. I can see why EasyJet's picking up. They're really ramping their prices up, charging more for luggage, more for tickets. Understandably, they need to regain what they lost in the pandemic. Right. This is one I talked about. This is Chemring. I've been talking about this for a few weeks now. This is a defensive stock. We had a good, this is a weekly chart, by the way, just a reminder. We had a good week in the beginning of Feb. We're sitting in that range, so I still think this is doable. The drop off in volume is significant, so I do need to be careful on this, but I think Chemring is potentially good. This is a key, this is a real litmus test for Chemring. If we might come down to 250, 270, we're 284 at the moment. If this works, I think we could come back to those highs or more. I think that's a potential bull flag. If I peel back from that, here's your mast. Look, all these pullbacks, so you get higher highs, higher lows, all up here. Then you get a significant 3 corrective wave pullback into this average, and then you go on a run. So we've had a 1, 2, 3 wave correction. We've had a 1, 2, 3 wave push higher. If we can base here and hold here and break out, I think we're going back to the highs and beyond. If we break this low, then I'll get out and stay out, short to medium term, maybe even long term. But that's part of my trade plan on that one. And what else are we looking at? TPI cap. So we're right under, you've got to be careful of this one. This loses its footing, that could drop quite hard, but I don't think it will. Actually, the volumes are not great. This could be due a decent pullback. I'll tell you what though, if that closes above 192 pounds, I'm in. In the meantime, pullbacks in this are buyable, definitely buyable, just need to be cautious. Right, Elementis, that's up from a low of 91. That looks higher to me. Volumes, it's not a, it's a slug, a bit of a slug. Right, I think I'm going to leave it there. Anything major? But if you look, my favorite stocks at the moment, or my favorite markets, is the commodities, particularly the wheat and the corn. In terms of stocks, the telecoms are doing really well, and I think this. I'm amazed they're not. I'm surprised they dipped this low, and I'm surprised they're not higher. But hey, just shows the vulnerability of technical analysis. Yeah, anyway, this Vodafone had a great week last week. I think if you see 94.95, I think that's viable. So if that boomerangs back to that breakout area, I think that's viable on Vodafone. It may not do it. We're up here at 103. Volumes are better. But if you're patient and get a dip, I think Vodafone could go to 138, 140 at least. I am in this. I am in BT. I think BT could pull back to 125, 130. I would expect my target end of year is 225. I think 250. I think I can go to 250. If the UK market is stable, if the FTSE does come off, and leading indicators suggest that this is not going to hold up, then I will just get out. So I'm in very few stocks. I mean the smallest number of stocks I've been in for a long time, and I'm constantly checking them. Well, obviously once a day, making sure that they are sustainable. And QQ, talked about QQ for, well, I've been talking about it off and on for ages now. But this looks like a bull flag as well. So at the moment, the shorts are not working. The dips are getting bought. The bellwethers are holding up. And commodities are doing really well. So, but we've still got to be very careful. The politics out there and the rate cycle is something we need to keep a very close eye on. So I am largely cash. I've got about 83, 85% cash at the moment. So I'm just in a few stocks, biding my time. And I've got another account that is heavily is tilted towards the commodities in the US. Okay, so that's me done. Any questions? Otherwise, I'll leave it there. Keep an eye on this dollar. Brilliant. Have a good evening and stay safe, and talk to you soon. Thanks very much.